Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Friday. Yes, thank God it's Friday. It's been a long week, and with Halloween on Monday, it feels like a very fragmented week. At least it does to me. Yesterday, if you told me it was a Monday or a Tuesday, I probably would have believed you. But it's Friday. It's November 4th. It's about 7:58. The market's going to open up in about an hour and 32 minutes to be as specific with you as I specifically can be. And the market's gearing up pretty good opening. You know, we've had, I think, 3 down days now. This will be the 4th. So it's time for it to go up. But I'm not convinced that we're done with this route. And I'll explain to you why. First of all, we still have employment data coming out in about 32 minutes before the opening bell. And this can go either way. I mean, look at the range. Non-farm payroll, whenever the consensus is 125,000 to 250,000, it's very, very squirrely, if you ask me. Unemployment rate is holding steady, it appears to be. But that's what I really want to see. I want to see the unemployment rate. That's the big, 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 big factor. If the unemployment rate is closer to 3.4, 3.5, I'll be happy. If the unemployment rate starts going up, 3.7, 3.8, that's not good. Non-farm payroll, that's the expectation. We'll see how the number comes out. It'll come out about an hour before the opening bell. So here's one of the reasons why. I want to show you why I believe the market's not done yet. First of all, we have the bond market, and that's the bond market. As you can see here, it tried to rally for a little bit, but now it's undoing everything, and to me, it looks like it's going to go back down. Now, the bond market is very, very instrumental to broad-based market, and as you can see, broad-based market has been moving along with it. And right now, although we're rallying a little bit, having a little hiccup there, as you can see here, the trend is down, and after having a nice pullback like that, it wouldn't be unusual for the market to gear up. But I am still bearish, and I think the market is going to head back down because that's what most of the sectors that have already had earnings are doing. Let me show you. For example, consumer discretionary, it's already almost down there. Communication services, look, I'm not kidding here. It's already way below that, and this has been leading us on the way down. And technology, as I'll show you, is there as well. And one of the reasons that's happening is because these stocks have already had earnings, and these earnings have priced in everything that's on the table. But the fact that these stocks are breaking down leads me to believe that that the Dow Jones, which has a lot of energy, which is one of the reasons why it's been so strong, I think the Dow is going to start heading down there too. And I think the S&P is already halfway there because the S&P has some of that blue chips and it has some of the tech. So I think we're going to come back down. Not much more, but a little bit more, enough to make lows. But I think this has to be undone and we'll have to come back down here. That's one thing. Number two, the sectors. Remember what I always tell you, when this gets really green, when this gets really, really green and this stays red, this is the dog getting excited when he sees a cute little puppy across the street. And this is the owner. And the owner is the one that has the brains usually in their head, and they control the dog. So this is the foundation. And this is the excitement. And I'm not seeing a lot of foundational growth. I mean, okay, energy, we've seen that. We've got a little bit in industrial, but you've got a lot of defensive stocks here. So there's a lot of squirrely stuff here that I'm not happy about. And also volatility looks like it's churning back around. It looks like it's stabilizing here. And when I looked at volatility the other day, it looked like it was overdone to the downside too. So I'm not sure if volatility will go down, and I think we may start seeing more upside. Put the call ratio is cooling off, but with that said, we've been in a bear market and this thing's been elevated all of this time. So it's not helping us too much right now, except when we get to extremes like this. But otherwise, while it's in this level, it just hasn't been giving us that strong of an indication because the market has been so darn bearish to begin with. Now, let's talk a little bit about global economy, kind of give us some perspective, and then we'll move on to the nitty-gritty. So the December S&P futures is up 0.68 after 3 major benchmarks indices closed red for a 4th straight session. So, I mean, a little bounce right now is not unexpected, as the Fed, who's very hawkish, sapped risk appetites while market participants look ahead to October's non-farm payroll, which is coming out in about 28 minutes. The stock market was weighted down by tech, telecom, and financial. Well, that makes a lot of sense. It's pretty broad-based. If it was just technology and telecom, I would say it's more tech-heavy. financial, broad-based. That's why I say the Dow's going to be part of this too. But the fact that the Dow's holding up is also because energies have been really strong, and they're a big part of the blue chip stocks. Reports showed growth in services sector decelerated in October, keeping the Fed's aggressive interest rate policy unchanged. That's not good. Now, here's where it gets interesting, and this is something that we're having a lot of debates about, and I wanted to talk to you guys about this. Now, one of the things that Powell said, Mr. Jerome, I'm not going to give you honesty till I get reappointed. Powell said is he used the word lag. He used the word lag in his speech. I don't remember. I'm just going to paraphrase him, but it was something to the effect that we have to take into account lag. I think that gives him a way out in December, because all he has to do now is say, and this would be 100% truthful, he's not BSing you guys, it would be, hey, we've made a lot of changes. We now need to see how long it's going to take for them to take effect. It's a country, it's a living being. The data we're getting is a little lagging, and we need to kind of hold up and wait. So that's a really, really big issue, where before it was pretty much a given that he was going to go 0.75 these 3 times. But now there's a question. There's a question. And that's why, look, U.S. There's only a, and this is according to the bond market. This is not according to economists. 44.8% chance of a 50-point base hike and a 55.2% of a 75 base hike. But now at least we're getting to some speculation. I was convinced, I had a 95% certainty it was going to be 0.75. The market set 92%. But in this case, we are now going away from 50 into 75, which is only making matters worse. Excuse me. And that's telling us that the sentiment is actually getting worse. I'm still believing there may be 0.50. I think it would be very reasonable and rational. These are not rational or reasonable people. But I think it would be very reasonable and very rational for them to say, hey, let's do 0.50 or even 0.25 and just wait a month. I mean, it's not going to kill. I mean, they didn't do anything for a long time, and then all of a sudden they went crazy. So we're going to be watching this very, very carefully, because finally, instead of having a 92% built into the market of 75, now it's 50-50. So that may offer just a little bit of relief for traders or investors who are starting to become hopeful. But I do believe they're overstaying their welcome. I really do. All right, so all eyes today are on the non-farm payroll. That comes out in 25 minutes. They're looking at around 200,000 compared to the previous 263, which was extended. I don't think the number is going to be really that bad. I think it's going to be in line with estimates, so I'm not going to make a big deal out of it. U.S. unemployment rate will be reported. That's what we've been talking about. I'm looking more at the percentage. They're coming out with 3.6. I'm hoping that the number will be 3.5 or 3.4. If it's 3.7 or 3.8, then what happens here is the worse the data is, the more this shifts to the probability shifts to 5.0 and away from 7.5. So the better the data is, the more it. I think I said it backwards. The better the data is, the more that the Fed sees that we're spending, the higher the odds that they're going to raise rates 0.75. So it's one of those things where if they have a clue that things are really gearing up, they'll go 0.75. They are on a mission. So the only way they would go to 0.5 is they see evidence that things are getting worse. So it's kind of one of those things where good news is bad news is good news as far as the short term, but that's what we're dealing with right now. In Europe, futures are up 1.31 morning following the hangover in Asia and China reopening, ahead of the released non-farm payroll report that's coming out, as I mentioned, very, 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 very soon at 8:30 Eastern time. Let's go back here. And Germany factory orders were down 4% month over month, weaker than 0.5 year over month. That's Europe's largest economy. It's really, really struggling right now. Now, in terms of sectors, and I want to, before I get into sectors, this is another thing I want to show you, 20-day breakdowns. There's really not a lot of momentum in the market. Remember about a week ago where we had about 400 stocks? Well, now momentum levels to the downside are finally starting to overcome momentum levels to the upside, but they haven't begun moving strong. We're only at 92. I mean, yesterday we were at 65 and we went down quite a bit. The day before we were at 25. See how it's picking up? 27. But look at this sucker. 74, 25, 214. 149, 414, right here, by the way. Remember when I told you we're peaking out? We went to 414. So we are nowhere near there on the downside right now. We only have 74.92. So there is a lot of fertility to the downside and to the upside if the market wants to move. I personally think we have more downside to go. Now, looking at individual sectors, you still got energy, industrial, healthcare, and financial consumer staples. Stay with these. To the downside, you know who we are, but utilities are starting to come up as I thought they would. Now, technically, energy looks like it's got more upside to go. Industrial looks like it's at a big question mark. Healthcare looks like it could go down a little bit more. Financials do not look good right now at all. Technology does not look good right now. Utilities is looking okay. Basic materials is looking okay. Consumer staples, I think, are going to go a little higher today. Real estate is just not looking great. It's close to the bottom. Consumer discretionary is already at the bottom. And communication services is making a new low. So it's the sentiment right now is very, very mixed. And I think it's going to be one of those times where we're really going to see the strong sectors really outperform the weak sectors. Now, I want to show you guys something. This is a spreadsheet. This has all the quantum indicator. It says Roger indicator. Well, Roger indicator, quantum indicator. I actually wanted to call it the master disaster blaster indicator, and I think people like it, actually. It's the funny thing of all. But this comes as a upsell. This was the $800-something upsell, but I wanted to show you these are all the ticker symbols that came on the long side yesterday, and look at their historic win rate. So what we do is we show every trade, how many trades that had a win rate of over 70%, and a profit factor, which means for every dollar you risk, you have a profit factor of over 1.5. So look at this. Dollar Tree, 24 profit factor for every dollar historically you risked on these 14 trades. You would have made $24 back 85% of the time. So I think people love this. And what's really cool about this, you can combine this with the sectors. So notice I said energies look really, really good and metals look really good. Well, you could focus on the energy sector or consumer staples or defensive sectors. So the point here is a lot of the time, like power right here. See, it's a utility stock. So my SPY right here, look at that. The SPY is pulling back. So the point is, this is a great tool to give you a gauge of what stocks are popping, which stocks are oversold, which stocks are overbought, the profit factor on each one, the number of trades, the win rate over 2 years. Now, this is something very, 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 very cool. And that's what you're going to be learning today. So folks, if you want to learn about this tool that I just showed you, how to generate buy signals, sell short signals with win rates, profit factors, all that stuff, you want to learn more about my quantum indicator, the master disaster blaster indicator. Now, I recorded a short demo so you could see how it works and why I think it could help traders in this crazy volatile market. I review how I use this indicator to find overbought and oversold stocks. And that's really, really useful in this market, which has big swings almost daily. Just look at the swings we've seen over the past week, right? Now, if you stay till the end, you'll get the steps on how to install it in your own trading platform, and I'll give you some nuggets as well. Follow the link below. You do not want to miss out. And watch my Master Disaster Blaster Quantum Indicator at work. And again, want to figure out how I generate a hit list every morning? Look at this new core, 5% profit factor. That means for every dollar we risk, we make $5 back out of the last 18 trades with a 77% win rate. Look at this. Let's see here. Dollar Tree, $24 out of 14 trades with an 85% win rate. AbbVie, $8 out of 16 trades with an 81% win rate. And you can pick the best one that you want, and we give this the night ahead. The night ahead. So you would have gotten this yesterday, last night after the market closes. Very, 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 very cool. I'm very, very excited about it, and I want you to check it out. Follow the link below. Do not miss out. Don't make that mistake. It's very cool, very educational, and you'll love it. And if you're getting something out of these videos, post comments below. I'll respond to you. I know who you are. Bye, guys. Have a great, great weekend, and I hope you're getting some value out of these videos. If you are, post comments in the chat in the YouTube channel. Bye.